Hello guys, today we'll be sharing my personal top 5 dividend stocks to buy and hold forever. And the last one on my list today is actually my personal favorite investment, but it is not a stock, so stay tuned and find out what it is. Oftentimes we as investors find so many amazing companies out there, but it becomes really tough to narrow this list down to a few companies that we actually want to invest in. That is exactly how I felt when I started investing. And that is also why I decided to make today's video. I have basically done all of the work for you guys. I have found the top 5 best dividend stocks to buy and hold forever. But in case you're new to the channel, then my name is Casper, and here we strictly talk about investing and financial freedom. So if you really like investing and are on a journey to retire early, well then press that subscribe button below. But without wasting any more time, then let's jump straight into the first stock to buy and hold forever. So the first stock to buy and hold forever is one that we all know. It is a global food and beverage company, and they make more than $82 billion annually in sales. And that is of course PepsiCo. The company includes brands like Pepsi, Gatorade, Mountain Dew and so on. And the company has more than $21 billion worth of brands in their portfolio. On top of that, then it is also an official Dividend King, and that means that they have increased their dividends for more than 50 years in a row. And that is completely insane to think about. They have a market cap of $220 billion, and that is making them one of the biggest players within the industry. They have a current share price of $163, and they are down by almost 9% year to date. And that could indicate that right now might not be the worst time to buy. But let's talk about what is making PepsiCo a really good company, and that is of course their dividends. They have a dividend yield sitting at 3.14%, and they have a payout ratio of 65%. PepsiCo is a mature company and they have a really high cash flow, so having a payout ratio sitting at 65% is completely fine. They also have a 5-year growth rate of 6.87%, and it is of course a company that just keeps on increasing their dividends year after year, so it basically only becomes better and better. And as I mentioned before, well then they have consecutively increased their dividends for 50 years in a row, and that is completely insane to think about. Just try to imagine everything that has happened to the stock market the last 50 years, and then having a company that has not only survived all of that, but has also managed to increase their dividends every single year. It is a dividend king, and it is a super dividend company. It should be on every single dividend investor's portfolio, and therefore it should also be on my list today. So moving on to the second company on my list, and this is another company that we all know. It is one of the biggest tech companies out there, and that is of course Microsoft. They are the owner of the very popular Windows system. They are also the owner of the Office packages, which includes things like Word and Excel, and they are also heavily involved in cloud services and AI. They have a market cap of $2.45 trillion, which does not only make them one of the largest tech companies out there, but it also makes them one of the biggest companies in the entire world. Over the last couple of years, Microsoft has moved to a more subscription-based model, where their consumers have to pay an annual fee for their products. And that has given Microsoft a lot more recurring revenue, which in return means that we as investors can get more in dividends. They currently have a price per share sitting at $330, and they have increased by 38% year to date. And even though that sounds like a lot, then it is pretty average for the tech sector here in 2023. However, it is still very, very impressive. But let's have a look at their dividends. They have a dividend yield of nearly 1%, and even though that is kinda low, then that is because there is an inverse relationship between the share price and the dividend yield. And when the share price increases, as it did with Microsoft during this year, well then does the dividend yield in return decrease. The payout ratio is sitting nearly at 28%, and that is great because it means that Microsoft can very easily sustain the current dividend, and they have a lot of room to improve it in the future. They also have a 5-year growth rate of 10%, and having a company with a double-digit growth rate in their dividends is absolutely amazing. And lastly, then they have also been increasing their dividends for 18 consecutive years, and that is absolutely amazing. And it seems like they want to continue doing that. When you combine the extremely good performance when it comes to stock return from Microsoft with their dividends, well then it is very easy to understand why that stock is on my list today. So moving on to the third stock on my list, and that is Realty Income Corp. And this is a REIT or real estate investment trust. And they are absolutely amazing when it comes to passive income. And this stock is actually one of my largest positions within my portfolio. REITs basically own a bunch of real estate, and they are then leasing all this real estate out to their tenants and thereby earning a substantial amount of money. REITs are not taxed at the corporate level. However, in order to be a REIT, then there are certain rules that you must follow, and one of those rules is that the REIT must pay out at least 90% of their taxable income to their shareholders in the form of dividends. Realty Income Corp is the most popular REIT there is out there, and they have more than 11,500 properties within their portfolio. And they also have an occupancy rate of 99%. They have 1,100 different tenants within their portfolio, and they are basically spread throughout 72 different industries. The company is not only placed within the US and has roughly 200 properties that are located elsewhere. The current share price for this REIT is $51, and year to date they are down by roughly 20%. And the valuation for this company is right now extremely good in my opinion. And I actually bought more shares in this company last month, and I will most likely do the same thing this month as well. But let's move on to their dividends, because that is truly what makes this company amazing. They are sitting at a dividend yield of 6.12%, and that is absolutely amazing. And due to this rule, with REITs having to pay out at least 90% to their shareholders, well then it is pretty normal for REITs to have a pretty high yield. They also have a payout ratio of 74%. And this is again normal because they have to pay out so much of their income. They also have a 5-year growth rate of 3.7%. And even though that number might not seem very high, then it is pretty impressive when you consider that they already have a very high yield. And they have also consistently been increasing their dividends for the last 25 years in a row. Overall, then is this company a really solid company when it comes to earning passive income. And as I said before, then it is one of my personal favorite and one of my biggest positions. So moving on to the fourth dividend stock on my list, and here we have Procter Gamble. It is a global consumer goods company with a market cap of $341 billion. They have a bunch of different brands within their portfolio, and you most likely know some of them and are most likely also using some of them on a daily basis. This is a very mature company, and the growth here is not that big. However, the growth is very consistent, also when it comes to their dividends. And that is exactly what we as dividend investors want, especially during times like these where the uncertainty is high. Then having something to fall back on and rely on is really nice. The current share price for P&G is $143, and they are down by 5.5% year to date. It is basically a company that never goes on sale because the quality is so good. So if you want this company, well then you usually also gotta pay the price for it. But let's move on to their dividends, because again, then that is what makes this company so attractive. They have a dividend yield of 2.6%, and they have a payout ratio of 62%, and a 5-year growth rate of 5.68%. So these numbers are basically pretty average when it comes to a dividend company. However, what makes this company extremely good is that they have increased their dividends for the last 66 years in a row, and that is very impressive. P&G is a company that is slowly but safely growing. It is basically one of the most reliable companies out there, and having this company within your portfolio is never a bad idea. So moving on to the fifth and last on my list, and this is actually not a stock but an ETF, and that is of course SCHD, or the Charles Schwab US Dividend Equity ETF. And that is my personal favorite dividend investment. And if you are a dividend investor, well then you've most likely heard about this ETF before. And there is a reason for it, because it is simply the best dividend ETF out there. It is an ETF that basically only includes really high quality dividend paying companies. And they currently have 105 companies within their portfolio, with the largest positions in companies like Amgen, Pfizer and PepsiCo. They also have a very well diversified portfolio with largest exposure to the industrial sector. The current share price for this ETF is $71 and they are down by 6% year to date. However, over the last 5 years, they are up by 41%. So this is usually an ETF that is providing really good and solid returns. But let's have a look at their dividends, because that is again what makes this investment here so great. They currently have a dividend yield of 3.7%, and that is pretty good. You don't really find many ETFs out there that has this quality companies and that high a dividend yield. They also have a 5-year growth rate of 13.61, and that is absolutely amazing. That growth rate is really hard to beat. And they have been growing their dividends extremely fast for the last 11 years in a row, and they will most likely continue doing so. Not only has SCHD given investors a great return, but they are also growing their dividends at a very aggressive rate. And it is truly impressive how they just keep on doing that. And that is exactly why SCHD should serve as a foundation for any dividend investor's portfolio. It is simply the best ETF out there, and the diversification that you get is really good, and that is super hard to match. That was basically all I had in today's video. Let me know in the comment section below what your favorite dividend stocks are. I hope that you enjoyed today's video, and if you did, then don't forget to smash the like button below and subscribe to my channel for more weekly content just like this. See you guys in the next one.